IPOs are back. The biggest IPO of the year, First Data, just went public on the New York Stock Exchange, and a lot of technology offerings have been going public on the New York Stock Exchange this year. I'm here with Garvis Toler, who's the head of the capital markets here at the New York Stock Exchange. Tell me, Garvis, so why have so many companies like Box, now Square just revealed that they're going to go public here. How are you getting some of these tech companies to go New York Stock Exchange instead of NASDAQ?
Well, first of all, thanks for having me. We're really excited about the trend of more and more tech companies choosing to list here. Since 2012, we've gotten the vast majority of those, and this year has been a very good year for us as well from that standpoint. I think it's really a recognition of our market model. We've handled very large IPOs really well. We have a unique market model with a combination of both technology and the human element with our designated market maker system. So I think they're really seeing flawless execution in our IPO process, and I think it's really helped. In addition to that, we spent a lot of time really cultivating relationships with the entire ecosystem that's involved in the technology space, and so we're really excited, and I think they all see that and certainly talk about what we've been able to do.
How early do you start talking to these companies, to these startups, and talking to them about the IPO process and getting them to go here?
Well, as you know, it's very fluid. A lot of times we really try to get in there 18, sometimes 24 months ahead of time. Even more importantly, we really try to understand the ecosystem, spending time with the right VCs and private equity owners of some of these companies, and try to build relationships early on. But really it starts in earnest, I would say, probably between 18 and 24 months. Although these days with companies staying private a lot longer, certainly that conversation has been extending.
And I know it's a big deal to you guys and the NASDAQ, but a lot of people will say, okay, once it goes public, does it matter? Does it matter which exchange it's on? I'm sure you'll tell me why.
I will tell you why. We do think it matters. As I mentioned before, that unique combination of human beings and the cutting edge technology makes a difference. Our stocks trade here with lower volatility, tighter spreads. That translates into real savings for our listed companies. We also serve as a very important source of information for the companies themselves, helping the IR professionals and the management teams of companies really stay in touch with what's going on in the trading of their stock and their peers.
And while IPOs have been fairly active this year, not as much as last year's blockbuster year, there haven't been a lot of tech IPOs. Do you think we'll see a lot more in the pipeline?
There are quite a few in the pipeline. We've done 13 tech IPOs here on the New York Stock Exchange, raising $5.7 billion. So yes, if you compare it to some prior years, it is down a bit. But as I mentioned before, there are tons of very exciting companies in the pipeline. Over the next few quarters, I would expect to see more come out.
Well, we look forward to that. Well, thank you, Garvis Toler from the New York Stock Exchange. This is Katie Roof for TechCrunch.